Good morning or good afternoon if you're on the East Coast or somewhere that is not. There, give me just a bit of getting things arranged here and dealing with a little bit of craziness. Last 24 hours has been pretty insane. I don't know what it is that is going on, but I'm assuming you can all hear me. Okay, good. Good morning, good morning, good morning. Hello, everybody. Trying to get things set up here. Hey, Kevin, Paula, Helen. Nice to see you all. Yeah, it's been insane. I had internet issues yesterday. So if you have weekly whispers, that will be delayed. So I've got to do that after we finish here. And hopefully Nick can get it up before the weekend. I'm crossing my fingers. Sometimes time zones and stuff, it's a challenge. So hopefully it all works out. So if you're a subscriber to Weekly Whispers, then be patient if you would. I apologize. So, but yeah, and I discovered a few days ago that because I've got a power strip for my machine and 3 monitors and all the other stuff I have plugged in. So I've got an extension cord. Well, I discovered it was this week earlier that the cat hit it hard enough to break the connection, right? The power strip or the extension cord going into the power strip wasn't very tight. So she just barely whacked it and broke it loose and completely shut my machine off. So I got some tape this morning and taped it so she couldn't do that. And lo and behold, about a half hour ago, you know what she does? She goes and literally pushes the button, power strip button, shuts it off. I couldn't believe it. I'm sitting here trying to work, get ready for this class, and she shuts off my machine. Like, what is going on? It's a crazy cat. So then I know, isn't it insane? So I mean, internet issues. Now the cat's turning things off. So I go get tape again, and I tape down the power strip, the button, right? So she can't push the button. I know. I don't know if she's smart or if it was just dumb luck. But anyway, it didn't really matter. I think so too. I think she's smart. I think she's trying to make me mad. So then I get that tape down just like 20 minutes ago. And then 5 minutes ago, I'm sitting here trying to get things up on the screen and get ready. And all of a sudden, the machine just says it's shutting down. She jumped up on the computer, the box, right? And she pushed the power button on it. It's just, right, it's, there's the top of the, if you have a big tower, right? The power button sits right on the top. And she pushed it somehow. Fortunately, I caught it in time. It didn't shut down the machine, but it shut down a lot of my programs. So I had to reboot those. So that's part of the reason I was a couple minutes late too, trying to get all that stuff back up and running. And yeah, so she's on my cranky list right now. I might leave her home this weekend. Going out to our cabin on Vashon, hang out on the beach. It was supposed to be nice weather this weekend, but now it's raining a little bit right now. So hopefully it's decent weather, but we'll see. I'm just gonna go hang out and relax. So it's been a crazy week, and this has been made an ending to it that makes it even better to get out there and just chill out. So yeah, exactly. She's letting me know the weekend's here. Maybe she knows we're going. She doesn't like car rides, so I think she's been out there twice, but it's so weird. I never thought I'd have a cat. Just forgot to shut my phone off with all the chaos. All right, let's get rolling. All right, we got some warm coffee. Hopefully it'll keep that cough away. I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not get into funded trading here. So here's all the stuff that is coming up. Inner Circle, check-in June 12th, and monthly is June 21st, 8 p.m. Mastermind Group is June 13th and June 20th. And then Monster Market Movers, June 14th. SPX Cash Flow Secrets Q&A is June 26th. Trade You, June 28th. Is that? I think that's me. I don't remember. I think I do one a month. I can't keep track of it anymore, and I don't. They just send me an email saying, well, "Here's your dates for Trade You. What do you want?" Then I put it in my calendar and I forget about it until it gets close. And I'm like, okay. So, atypical guy, right? Christmas Eve, I better start shopping. Power Hour Monday at noon. Trading Coaches Playbook, this one every Friday at noon. And then, sorry, How to Trade the Markets, June 12th. First Power Option plays every Tuesday and Saturday. Thursday, Covered Call Explorer. E-mini Think Tank with Brandon Monday, Wednesday, and Thursday. And then Sean Monday, Tuesday, and Friday for Vega Spread Mastery. What just happened? That was weird. That was weird. Is there a link there somewhere? I don't know what happened. And it continues. What do you do? What do you do? You know, I don't know how today's going to go. So I hope you're prepared for some speed bumps. So far, it's been a crazy, crazy morning. So at least for me, hopefully we can tame that. But all the social media sites you can find us on. So here's all my my tools. If you like my style of trading or think it has value and you can benefit from the way I teach or what I do, whatever. Patterns and Flash, which if you haven't had that, it's a training tool all about charting and patterns, mostly patterns, but at the same time, it's got the basics, right? If you don't understand the basics, the foundational technical analysis parts, it's really difficult to understand the patterns and use them effectively. So it's got everything in there. It's literally pretty much soup to nuts. If you're new to charting, or if you're, even you know, even in the middle of the road, actually, I don't even care where you're at as far as what you consider your expertise level. I've had people that had years of technical analysis under their belt that got into it, and they're like, I didn't know that. You know, eventually you get to a point where you know a lot, and sometimes, and even I do this, going back to, you know, going to some classes, and I go to classes and stuff just to pick up nuggets. You get to a point, right, when you start this journey, you start feeling like you're drinking out of a fire hydrant. But then eventually it starts to kind of come together and you start to get it. And then eventually you get to a more advanced level where most of what you hear in classes like this is just like, okay, I know that. But eventually there's a little nugget. And sometimes it's just a little tweak or one little thing, or somebody says something differently that you didn't pick up on before, and all of a sudden a light bulb goes off, right? So some of you may be in that place where you're brand new. You're still drinking from a fire hydrant. Some of you are in that place, and I see some names here that I know that you're in that place where it's just a little nugget you're picking up here and there, right? But that doesn't mean that there's not value there. So you might have to go spend, you know, an hour or 2 hours, 4 hours to get just a little bit of things. But those little differences can make a huge difference in the end, right? It's like the old story of the Kentucky Derby. Some guy went back and studied the winning times from first to second. And the difference was, I think, a second, whatever it was minuscule. It was almost nothing, right? You can apply this to any kind of race and anything like that. The difference between first and second was like 10%. But the difference in prize money from first to second is 10 times, right? The Kentucky Derby was the analogy they used, and the prize was $1 million. Second prize was 100,000, right? It's 10 times as much. Yet the difference, when they looked at all the different times from first to second place, was only 10% difference. So that little 10% can make 10 times the difference. Statistically, it works in almost everything, right? So regardless of where you're at, there's always something to be learned, right? And especially when you get into the financial markets. You know, I've been studying some stuff that I haven't really gotten into until recently. Systems building specifically, and it's really interesting. You know, I've always known about it for years since I started, right? They call it black box systems, but I've been playing around with it a little bit. So just out of curiosity, you know, if there's something you can get that gives you a little bit more of an edge, why not, right? Even though what I do is working, and that's why for a long time, I've hesitated playing with it, because it's like, you know, if it ain't broke, don't fix it, right? But then I'm looking at it, can I get just that little bit extra edge? Because that little extra blip can make a big difference. So Weekly Whispers, we just started that this year. It's basically, I just go through once a week. I go through charts, look for patterns. I usually have 20 to 30 patterns every single week, and that's all I watch for the week. I don't go every single day hunting for new candidates. Those are all. If something pops up, then I'll trade it if it looks good. But for the most part, I only do research once a week. It takes 2 to 3 hours, and then I just sit and watch everything and manage what's there. So, yeah, it's one of those things that I try to do it every day for a long time. And then what you realize is that the patterns don't change that quickly for the most part. So sometimes candlesticks can, because they're short-term in nature. But anyway, and then small accounts, big returns. That is another class that I did. And it is an on-demand class that you could get where I go into, if you're trading with a small account, right? If you're starting with a smaller amount of money, it's a little bit more challenging. Down the road, what you will realize is that it's a good thing. Because I'll never forget going back, and I started trading in 2000. I remember thinking, if I just had 50 grand to start with, because I was 24, young and dumb, and I was broke basically. I was living paycheck to paycheck, right? And I had to scrounge up money to start trading. It took me a few months to get enough to where I was comfortable putting it in there. But I remember thinking, if I just had 50 grand, I'd make a fortune. The opposite of that is true. Okay. It's actually better if you start with a smaller amount, because then you have to be more selective. I met a gentleman years ago that was a doctor, and he turned $600,000 into $100,000 in 6 months. Did you hear those numbers right? 600 to 100. He lost $500,000 in 6 months because he came into the market. He was comfortable financially. He made a good living. He was a doctor. He had a PhD. He's a smart guy. And he made the mistake of thinking that the market cares about his intelligence or his doctor practice or how successful he was in that business. Market does not care. Doesn't care about his PhD. It doesn't care about his success in life and all the money he has. That's the beauty of the market. It's a great equalizer. Doesn't matter where you come from, what language you speak, none of that matters. Speaking of noise, that's all noise. Market doesn't care. What's your skill level? He lost $500,000 because he came in thinking he was going to just tear it up, and he blew himself up almost. So it's one of those things that you got to be careful to distinguish between luck and skill. And I'm kind of starting to see, even myself, even after 23 years, you still kind of, light bulbs still go off. And the skill in this business is in the analysis part and setting up a plan and managing your mindset and managing your trades well and making good decisions. What happens, the outcome of a specific trade, that's just pure luck. It's the flip of a coin. But how you respond and react to how things move and act, after you do the analysis, you set up a plan, and then you have to react to what happens next. And whatever the outcome is just a flip of a coin, right? So I just saw a post, I think it was yesterday, and I don't I keep saying I don't spend a lot of time on Facebook, which I don't compared to how I used to, but some guy posted this some picture of some trade, and a lot of these guys do. A lot of these people they're new to the market, they're retailers, they don't understand, they haven't been around for a long time, and the guy put something on it. I guess I was right. It was some massive win, right? Something that just jumped on news. And it's like, dude, you weren't right. You got lucky. Okay. You happened to be in the right place at the right time when the stock made this massive move. And maybe he did some analysis. Maybe he knew about the stock. Maybe he expected that it was going to happen because of something. But unless you have inside information, there's no way you can know that kind of thing's going to happen. Right. And then you don't know how big it's going to move. Right. If maybe some company's coming out with something new and you know about it, but it's not really public knowledge. I mean, it's not out there in the mainstream, I should say. If it's inside information, that's illegal. You can't do that. But maybe he knew something that most people don't. Maybe he expected the stock to move. But again, how do you know it's going to move that big? Maybe like 7,600% or something like that overnight. You just don't know, right? So you can analyze till the end of the moon. But at the end of the day, when stocks do what they're going to do, it comes down to the flip of a coin. Which kind of goes to a little bit of the theme, but was a price range on the weekly whispers? There isn't a specific range, except for, I think with the market dropping off last year, I adjusted my filter a little bit, because I have a filter that I look through, which basically is optionable stocks, volume, and price. And I think I moved it up to $25 or 30. It might be at 20. I usually keep it about 20 or 25. And then volume, usually I think I have it at 2 million or 2.5 million average volume. So, which essentially will get me about, it usually gets me right around 300 candidates. If you remind me, Paula, we'll go there, but a lot of them are, $20, $30 stocks. So, excuse me. I only got one Altoid left. But we're going to spend a lot of time on charts because we're going to talk a little bit about noise. It's not a super complex subject, but it is. It just depends on how deep you want to go. And I don't want to go too deep here. So we're going to stay kind of surface level on it. And just kind of some basic topics. If you want to dig into it, you can dig into it more down the road and just into deeper aspects of it. I don't know if there's a need, but it depends on what you're trading, how you're trading. So, and that's the beauty of the market. You can set up the trades however you want. And it's really interesting getting into a lot of this system trading, which is, a lot of it's computerized now. Back in the day, when I started in 2000, the internet was in its infancy, and it was getting bigger then, but it's gotten with the computing power that we have now and the data that we've been able to collect and store. It's gotten significantly bigger in the last 10, 15 years. So, but here's the one thing too. Well, I'll touch on that when I get there. What is noise in the market? How do we recognize and how do we adapt to it? What exactly is it? It's basically inconsequential movements that really don't affect the overall direction of the market, right? And a lot of this applies more to intraday. If you're watching stocks intraday and you're watching the moves, you get into a tick chart or a 1 minute chart. It can be pretty crazy. The noise that you get on intraday charts, especially the shorter time frame you squeeze it into, the more noise you get. Right. And it's just gyrations. It's people moving positions, doing this, doing that, traders, intraday traders. I had the experience in, I think it was 2001, maybe it was 2002, to do some prop trading. So I'm like, what's prop trading? It's called proprietary trading, right? Where there are firms that will put up capital for you to trade and then they split the profits with you, right? They're essentially paying you to trade for them. And they've gotten big in the last several years because now that they have the ability to practice trade, right? In 2001, 2002, the technology wasn't really there. Well, now you can set up systems that say, well, you prove yourself practicing first. If you pass the test, right? If you hit these numbers, if you hit these markers, then we'll fund you, right? So it makes more sense now. It's a lot easier for them to know what's going to happen. Well, back then they didn't have that, right? So, but it was kind of something I couldn't turn down, right? I'm 25, something like that, maybe 26. And I was a broker at the time, which was an interesting experience. I won't go into now. But one of the guys that I worked with in that industry, he said, hey, you want to go do some prop trading? I'm like, what's that? I didn't know. And so he filmed for me. He said, they'll give you 300 grand to trade with. You split the profits 50-50. Okay. That's a dumb question. Yeah, I'll do it. And it was interesting because I was sitting in a room. I had to go down to Vegas for 6 weeks and train, right? And then I could trade remotely after that. But yeah, it was interesting sitting in that room. There's about 30 or 40 other people trading. And we had 2 monitors, the old school big ones, right? That's all you had room for. We had these huge tables, right? The big giant things, right? They were like 24 inches. They were monstrous for the day. But it was interesting sitting next to other traders and you're picking their brains, and just the whole experience was really mind-opening. Excuse me. But it really opened my eyes to the intraday movements of the market and what moves them. Because when you sit there and watch a guy next to you that's pulling the trigger on 5,000 shares of a Bank of America and Wells Fargo, he's going long Bank of America, short Wells Fargo. It's called pairs trading, right? Where you take 2 stocks that trade together, like an Exxon and Chevron, Bank of America, Wells Fargo, somebody that's in the same business, same industry. And if one of them moves abnormally, then they get out of what's called parity, right? If they normally trend together, so they move in sync. Well, if one of them moves and the other one doesn't, then they're out of sync. So let's say Chevron runs up a bunch and Exxon doesn't. It doesn't move with it. So you would short Chevron and go long Exxon because Exxon's either going to catch up or Chevron's going to come back to parity with Exxon, right? So you take that little, it still exists. People do it. I didn't like it. I didn't think it was a good strategy, but that's what we did. And so all of a sudden you realize I'm sitting in this room with 30 or 40 other people, and Mark, the guy next to me, is pulling the trigger on 5,000 shares of a Bank of America. He's either going long or short that, and then he's shorting the other one. And you start to realize that a lot of these intraday gyrations are traders like that sitting in a room somewhere, or maybe a whole bunch of traders sitting in a room. They're all trading the same stock, right? And so these intraday moves you start to kind of see that these are just people taking these weird positions. They're not necessarily indicative of the actual direction of the stock going. Because if you're looking to short Bank of America, you might be bullish on Bank of America. It may have made this big move up, but then you got a whole bunch of people shorting it, trying to pair trade it with somebody like a Wells Fargo, right? So people will short the stock, even though it's a bullish move and they might be bullish on it, right? Does that make sense? So, and it was one of those experiences that has helped me to see and understand that what you see a lot of times, especially on intraday charts, is just people like that are positioning for the day, right? So, and it's one of those things you can't, filtering out noise is not exactly easy, right? The whipsaws, you've probably all been whipsawed, right? It's not fun, but it happens. And sometimes a lot of it is just flat out experience. You have to kind of just learn to see it and recognize it. There's the first thing. It's not easy, right? No, I didn't cough up a hairball, but I feel like it all the time. It's irritating. I think I'm mostly over it, but it seems to only happen when I'm talking a lot. And even then it's kind of hit and miss, sporadic. So it's irritating, especially trying to do this. If I wasn't doing this, it wouldn't be a big deal, right? But, if I'm just having a regular conversation. But anyway, yeah, learning to recognize the noise is not exactly super easy. But a lot of times you'll have a huge, quick move with volume, either lots of volume or no volume. And if there's no news, it could just be noise. It could be, sometimes a huge volume. And if you can't find any news on it, then, it might just be somebody taking a big position. It might be Kathy Woods coming in and buying up a whole bunch for who knows what. But if there is news, and this happened, I think it was last week or maybe Monday on Triple M, it all of a sudden just spiked intraday. I mean, took off like 3-4 points in a matter of 5 minutes. Which didn't make me happy because I had puts on it. I was like, what's going on? I started looking for news and I was like, okay, I'm getting out. I was up a little bit. I think I ended up breaking even or losing like 20 or 30 bucks. So I was basically break even. Was looking for a huge move on Triple M, possibly, because they're in a lot of hot water. There's a lot of legal hot water over some of their products they've had over the years. I don't know if you've heard of this. They're in a huge lawsuit, multi-billion-dollar lawsuit, over some of their hearing things that they made for the military, hearing loss, all kinds of things. And there's all kinds of things about with their products that are in question, and some other chemical things that they have that they were, I don't know what the details are of it, but a couple of minutes later, I pulled the trigger on this trade. I'm like, I don't know what's going on, but the volume spiked, the thing spiked. There must be something going on. So I pulled out of it. I'm just going to get even and wait and see what happens. And sure enough, about 4 or 5 or maybe 10 minutes later, it's up another 7 or 8 points. So it made a huge move, made a 10-point move in like 10, 15 minutes with huge volume. But there was news on that. So in that case, obviously that changes things. It's not just noise, but it had something to do with, they were in talks to settle one of these suits or something like that. So it was good news for them. But if there's no news, then it's suspect, right? You have to question it. Go, I don't know if it is or not. But there's the other thing too, is nowadays you've got these algorithmic systems, right, that are buying and selling. If there's something at a significant level, right, a support or resistance that is well established, then a lot of times people have these algorithm systems that are designed to go in and buy them. Right. And I'm playing one with right now. I've got this system I'm toying with that entered me into a trade, shorted something, and it still hasn't stopped out. I can't figure out why. I don't know what's going on with it, but I'm going to leave it because I was short and now everything's turning over. So it might turn out profitable, but I don't really care. I'm just toying around with it. And part of it for doing that is so that I can see, and I already see kind of at a superficial level, but I'm trying to dig deeper into it and see how the systems work. So it gives me a little bit better idea of what is going on behind the scenes of the market, right? That's a little edge that I might be able to gain from it. I don't know yet. Sorry, another hairball. It might be, I don't know. There's hair floating all over here. So she's obviously shedding a lot. So, but here is what we can use, because that's the ultimate question. Okay. How do we as traders, especially without having any kind of, and I don't know if there is a really in-depth way to create something like some kind of system that would recognize the noise in the market and filter it out. The only really way, I mean, that's what moving averages are for, right? And that's essentially what most people use it for. It filters out the noise and it gives you a cleaner, smoother look at what direction the price is heading. And obviously you can have, you know, a 2-day moving average, you can have a 200-day moving average. Obviously a 2-day moving average is going to follow the price very closely. It's not really going to filter out much noise. You get the 200-day moving average, that's going to filter out a lot of noise. And it's important to recognize that a lot of these big funds, the hedge funds, the mutual funds, they trade based on what direction those moving averages are pointed. If they're pointed up, they're bullish. If they're pointed down, they're bearish. And they either sell their positions or they go short, right? But a lot of these funds, and this is one reason I've never been a big fan of mutual funds, is that they have to stay invested. They have to keep, I don't know, I think it's like 80 or 90% of their capital. They have to keep deployed at all times. They can't just sit in cash, right? So even if we're in a bear market and you have a mutual fund, the mutual fund manager, their job is not to make you money. You know what their benchmark is to beat the market. So if the market's down 30% for the year and they're only down 25%, they're celebrating. Hey, we beat the market. We did 5% better than the market. You're still down 25%. But that's a celebration for them because they did better than the market. And the sad reality is something like 80 or 85%. 80 or 85% don't even do that. They can't beat the overall market. They don't. The vast majority of funds just fall. Actually, they're worse than the market. ETFs are a better option, which is a mutual fund, but it's just different. ETFs, let's just leave it at that. They trade like stock, right? So, and ETFs don't, it's not necessarily actively managed, right? They're not getting in and out of positions. They're buying the stocks that are in part of their ETFs. That's what they do, right? Some of them might be, but, so yeah, that is, that's the disadvantage to mutual funds, is that they have to keep their money in, right? And a lot of times, I mean, this is where Kathy Woods, she's essentially a technology. And I don't know if that's what the fund is. Some of these funds are specific to certain industries. So they have to invest only in tech, right? They can't go out and buy a utility company. I don't know. I don't live in that world. I don't know how but I know that they have parameters and certain boundaries that they can't go outside of. They have to stay in their little world, right? Which puts limitations on them. That's one reason to manage your own money, right? Because you have no limitations. You can do whatever you want with it. But moving averages help to filter that out. That is the purpose of most indicators, right? If you're looking at stochastics, or the purpose of that is to filter out the noise. I don't use a lot of that stuff. I look at it a little bit here and there, but for the most part, I don't. So there are lots of indicators that help to filter out the noise in the market, so you can see a little smoother look of what it is, of what direction things are going, right? You know, if you use the 10 or 20-day moving average, that obviously smooths it out over 10 days, right? Or over 20 days or 40 days, whatever the number is, right? There are systems out there designed to reduce noise. Okay. And this is where systems, this is one reason that for over 20 years, I haven't really played with them, because when I started, there was all these people coming, oh, we got this system. It's they call it a black box system, right? And I've never been a believer in them for one reason. We are emotional beings. And you cannot just take a whole boatload of data, no matter how much data you have. We have so much more data today than we did back then. You can't just take that data and build a system on that without, you can't account for the human emotion factor. It's impossible. Even though as humans emotionally, we are fairly consistent and we react similar in similar situations, right? You can actually track a lot of that. But you just don't know when it comes to the financial markets how people will react to certain situations. I mean, you can go back and look at what they call price shocks, right? 9/11 was a price shock. I mean, the market shut down for a week. It was so crazy. The housing crisis it wasn't really a price shock. When Lehman collapsed, that was a price shock, right? Some big giant event that takes place that the market just panics and freaks out and sells off 20%, a huge amount, right? That's a price shock. And these mathematical systems that you create that are based on data and things moving in a certain way, they can't account for that or adapt for that. And that's a big part of the problem with these systems, is that if you're not prepared for that and you don't build something in to protect against it, then you could have a system that returns 50% a year. But then if you have a price shock that hits you for 70%, you're still losing, right? So systems can be very good and beneficial in a lot of ways, but they're not the end all be all. And they're just one of those things that are just, you have to treat them for what they are. They're black box systems. They're using data. That's it. So, and that's where I think the AI thing, at first, I was kind of enamored by it and I was blown away. It was like, this is crazy. But again, it's just data, right? You're just inputting data and information into this model and you're training it to use this data and compartmentalize it in certain ways. But looking for heat. There you go, Kitty. So as much as, there's a lot of hype and a lot of fear around AI, I think in the end, it's going to be hugely beneficial, but whether or not we have robots that can think for themselves, I don't think that's ever going to happen. I mean, sure, can they come up with a logical conclusion? Yeah, because it has all these data points. They can go, okay, this and this and this. And maybe that's good. Maybe we'll get some robots that'll have a little common sense, because we certainly don't have many humans anymore that have it, right? I mean, people have lost their minds. It's crazy. Maybe the robots will help that. Sell puts on Skynet. Skynet. How come I'm drawing a blank on that trip? Anyway. That doesn't help. Terminator. Oh, I know that. I know it's a movie. It's an awesome movie. I haven't watched it for years, but I watched it when it came out. I was a teenager, I think, at the time. Oh, really? Oh, okay. Let's go look at it, because that's all I have on the noise part. What's the ticker? Oh, wait a minute. Oh, now you're messing with me. Is that right? Okay. I didn't pick up on that at first. Usually I do, because that's my second language is sarcasm, right? That's what happens when you come out on April Fool's Day and your feet first and supposed to be a girl. It's like, whoops. It was supposed to be 2 weeks later, but anyway, I'm going to get rid of a one. So if y'all have charts, actually, let's do that. I wanted to do that. We'll look at some intraday charts. There's well, this is just I just dragged this down from this is one screen I use for you can see this is well like a Visa MGM, Triple M, BNY, LNC Congress. These are all trades that I was I think I've been in and out of all these. I'm flat right now. I just decided, you know what, this is too crazy. I'm going to wait for this market to kind of figure out a direction, and we're kind of getting one. But let's see if I'm going to make this big. Yeah, there's that spike. I don't know if we can we go backwards on that, or is that? You see on the very left-hand side of the chart there. I can't roll back. So this is that. I'm going to change it to maybe a 15-minute chart, 10-minute, 15-minute. Okay. So yeah, I was in puts, right? And things were just fine back here. The entry point there, you can see that orange line is 97.03. So I was in puts here. It was looking good, right? We down to 92. I can't remember if I don't think I took part of it. I think I had an order down below it to take part of it out if it continued. So we drop off of the first few minutes here this day, and then we run, and the next day it gaps up, which the whole market did, right? This is, what is this, Monday? Oh, that's Friday. So it gaps up and sells off a little bit. And then this candle right here is when the news came out. And it just took off. I mean, you see it was at 97 and it ran to 100. And it was somewhere in that candle where you look at the volume down at the bottom, you see that huge volume spike. Like, something's going on here. I guess it's that one, but something crazy is going on here. And I was like, all right, I'm just going to pull it. Again, it was close to break even. I don't want to ride this thing. Who knows what it's going to do? But that's news right there. And that's what happens with news. Now, if you see a move like this, and either there's very little volume or there's no news to it, it may or may not be nothing. That's what's hard. That's why it's so hard, right? You can't tell until later what it really is, what caused the move. Usually a move like this with that kind of volume spike is typically followed with some kind of news. That's almost always the way it goes. It's not just random. But if there is no news, then that could be random. It could just be some big whale coming in, buying a bunch of it. It could be Kathy Woods, could be Buffett. Somebody mentioned Buffett earlier. But that doesn't happen very often. Most of them, they leg into or they scale into positions, right? They're buying in chunks. They're not going and dumping 1 million shares on the market at one time because they know that it's going to cause chaos, right? Plus, it's hard to do that. You got to find somebody that'll fill all those orders. So they put them in little chunks at a time. They're averaging in and they're getting in. That's another reason. Reversals, okay? And we've had this huge spike in the market, right? And I don't have a lot of confidence that the trend is going to continue. But there's also no indication right now that we're going to turn over. And if people are putting money to work right now and they're getting into the market, they're not going to start selling off quickly. So we might continue to trend higher. That's what's goofy. It's hard to tell. In fact, I'll tell you one reason I'm staring at right now is, where is it? I don't know if this is, let's do that. I think that will be the easiest way. There's the Dow, right? And here's one thing, and I've been talking about this for a little while now. Let me get a longer term. Look at that. Those lines have been there for weeks now. That's the downtrend we're in with the Dow. And clearly, very clearly, the market sees it. The market recognizes that spot. We got that little range, right? That's on a closing basis. You've got 2 hits on it. You've got some intraday hits on it. You've got this intraday range running up here to, well, that would be about 34.1. But the market came up and tagged it today and rolled over. So even though you have the NASDAQ, which is on a tear, in fact, you know what? I think I'll just do that. I'm going to pull this down here. It'll be easier. Just make it big. So this is the other one. I have it sitting up there on my other screen. It's just a small view of all the major markets. I don't know why that one, the Russell's so much bigger. But the right side is all daily charts. The left side is intraday 5 minutes. You see that top. In fact, I'm going to squeeze those down. I think it's a little better it's a little easier to see that like this. Let me get rid of that right now. I guess that didn't help much, but you see the top here, the SP, right? Look at the NASDAQ and look at the 50-day moving average. Talking about filtering out noise, right? This 50-day moving average is on a nice upward trend, but look how far the price is away from the moving average. It doesn't very often get that far away, right? And when it does, you can see here, back here, kind of in the middle of that chart, not only, I mean, the moving average started to turn up, but it got so far away from it that it was too far. Same thing on the downside, right? Here, the NASDAQ dropped and tanked. So if it gets too far away from the moving average, it typically is going to either reverse or it's going to go sideways while the moving average catches up, right? Unless there's something that changes the direction of things, which is possible. So, and that is one way, I mean, as far as get filtering out noise, you can look at that. And that's why one reason I'm not super bullish, because you've got too big of a move on the NASDAQ, where we're so far away from the moving average and we've accelerated so much that the odds of a pullback are significantly higher, right? And trading is about odds. What are the odds of XYZ and happening? Okay, is this market going to continue? Could, but the odds are against it at this point, from what I see, right? Same thing with the SPX. Now, it's not quite as far away, but yes, 50-day simple. I don't really use exponential moving averages. I use all simple. It's a matter of preference. Some people like, on the shorter term, they like exponential. Some people like, longer term. Generically speaking, from what I understand, most traders use, on the 50 and 200, the longer term moving averages, they use simple. On the shorter term, you use exponential. Potato, potato. Use what works for you. Use what works for you. Some people, I mean, Rob's a fib. I don't call him a fib freak, but he's a fib freak. But fibs are awesome. And you know what's funny is he'll do this fib analysis. I do my analysis with patterns and just support, resistance, trend lines. And it's mind-boggling how often we come to the same conclusion. It's like our analysis tools are a little bit different, but at the end of the day, the analysis and what the expectations are very similar a lot of times. And it's not just Fibonacci's. I've been looking at stuff with other traders that have other analysis tools, and in a lot of ways, we come to the same conclusion using different tools. So the tool you use isn't as important as the basic analysis. You know what I mean? So, but then there again, you can see the Dow is hitting that line, and the 200-day, and see when the money managers look at the 200-day. A lot of them do, right? And if it's turned up, they're going to be bullish. They're going to be buying stuff. If it's turned down, they're bearish. But what do they do if it's flat? I mean, look at the SPX. The 200-day moving average has been flat for a month now. It's just not going anywhere. The NASDAQ is mostly flat. It ticked up here a few days ago because of that big move a couple weeks ago, or whenever it was, right? That's averaging 200 days. So it ticked up a little bit. The Dow was moving higher, and it's actually rolled over in the last couple of months, and it's just slightly moving lower. The Russell pretty much flattened out. I mean, it turned up a little bit, but then it turned flat, and then it went sideways, and now it's actually trending lower. And one of the reasons you see the huge drop in the Russell when you didn't see it in the other markets, right? You had a decent 2-day drop. Part of the reason for that, do you remember what happened in early March? The banking crisis, right? A lot of these small regional banks were in trouble, or are in trouble. They're still in trouble from what I understand. They reside, a lot of those small regional banks, they're small caps, right? And the Russell's a small cap index. So we have an index that has a large percentage of companies that are crashing, possibly going banco. Those little regional banks are in the Russell. So the Russell got hammered harder than the other markets did. So you've got the Russell, which did just break out. And this is one thing I've been talking about for 2 or 3 weeks, is that you've got the Dow still in the downtrend. The SPX and the NASDAQ have broken out and getting bullish, right? 52-week highs. But the Dow was still in the downtrend. The Russell was until a week ago. It broke north of it, out of its range it's in. But still, in the big picture of things, this is still in a downtrend, right? where that, I need to get rid of that, but oh, interesting. Oh, look where we hit. That's a weekly chart. Let's go back to daily. Oh, interesting. Huh. People say, when I started 20 years ago, there were people that still this technical analysis stuff. They were like, "Oh, that's voodoo." They called it voodoo, or they're like, "That doesn't work." And oh, wait a minute, is that that's there? That's accurate. Yeah, it's become much more mainstream. And I'll never forget. Speaking of being a broker, there it is, right there. Came up and recognized it. That's what's weird. I mean, even after 20 plus years, you see this stuff happen, and it's just, look at the Dow and the Russell both hitting their downtrend lines and rolling over. Will they continue down? I don't know. I'm going to wait for some kind of pattern to develop. We got a shooting star at this moment in time on the Dow right now. We've got a shooting star going on at resistance. Look at what happened last time we had a shooting star. It looks almost the same as that, doesn't it? So we'll see how things close out. But if it is going to close about like that, I will be seriously considering puts, a small position possibly on something, maybe even just the diamonds. Even the Russell's pretty overextended too. So, but yeah, it's getting interesting. Let's put it that way. That's a nice way to put it. And it's hard to tell what's going to happen. Nobody really knows what's going to happen. I have my suspicions. I have my analysis. Whether or not that comes true remains to be seen. But I think the economic picture is getting uglier and uglier from a macro perspective. So hope for the best and prepare for the worst is the old adage that is a good idea at this point. So, in fact, I got a friend in California, and he said, I just met with him Sunday, and he said that he loaded up on a ton of silver. Holy cow. Just spilled coffee. It's the day, I'm telling you. Yeah, he said that he loaded up on a ton of silver, and the guy that he bought from told him he's done $14 million in sales of silver just this year alone so far. Physical silver. It's okay, well, what's normal for him, right? Because it's all relative. If he does 40 million a year normally, then that means nothing. 14, he's actually down. But his normal year is like 2 million or something like that for a full year. And he's already at 14 halfway through, not even halfway through the year. So there's a lot of people out, gearing up for ugly times. Whether or not it happens remains to be seen. But there's definitely there's a storm brewing, let's put it that way. And it's wise to, if there's a storm coming your direction, it's wise to board up your windows. If the storm doesn't hit or misses, it goes a different direction, great. You boarded up your windows for nothing. But if the storm does hit, do you want to wipe half your house out? Probably not. So here's the spiders. All right, Brenda, we're going to rip through these. If anybody else wants to look at something real quick. I don't know whether to be mad at you or laugh at your trip. I'm still kind of like, I keep looking back at that Skynet thing, looking at it like, wait a minute. It's starting to come back to me though, the whole thing in the Terminator. Yeah, that was a good spot actually. So yeah, there's the spiders. It looks just like the SPX. The only thing we have, this is not showing today. You have kind of a quasi rising 3, but not that excited about it. It's the volume's gotten light. Look at the volume the last few days, which actually is not that big of a deal. Let's start streaming and see if we can get, it's not exactly live, but it's close enough at least. Okay. So there's the SPX, or that's the spiders, but pretty much the same as the SPX. Right now, it's a little shooting star. And I don't know how accurate that volume is right now, but he is going to look just like the NASDAQ. Oh, interesting. That's not, there's today. Holy cow. I think that's true. Should have known that. Well, there's pretty significant resistance there at 358, 359, which we've actually run into. Pretty much tagged it. But there's what you might see. In fact, I'm going to, if you want to go to the close of that, we'll do that and then see what it looks like back here. It's probably, yeah, that's probably a little bit better, but close. I mean, there's a range, right? But what do you see that's definitely concerning right now? We got three little dojis here, right? We got a huge move. You got a rising through methods here, which actually is super strong, indicates a lot of strength. There's quasi one there, but you got to rise. That's actually almost a mat hold, right? Which is a continuation pattern. Then you get three dojis, huge bearish engulfing pattern. A little pop up yesterday with super light volume, right? The bearish engulfing pattern didn't have tons of volume, but it was bigger than average. So the bears came in pretty strong at this level, at 355 level. After 3 days of doji, the bears came in and said, we're going to knock you out. Boom, they knocked them out. And then yesterday, the bulls tried. They tried to get off the mat, but they didn't. Then they stood up this morning and said, okay, we're up. Let's fight on. And boom, they actually pushed it. Looks like to a high. What's that? 357.50, 357.66. They made a high by 16 cents and failed. Right. So they got one little punch in, and then the bears came back and just started beating the crap out of them. And right now, at this moment, well, 15 minutes ago, the bulls are on the mat again right now. Whether or not they get back up by the end of the day remains to be seen. But if this candle closes like this or goes even lower, that's a huge bearish signal. Huge bearish signal. So I would not be long on this thing at all at this moment in time. And if I had long positions or bullish positions on the Qs, I would be at least putting a stop pretty tight or scaling out of it or completely exiting. If this thing closes like this or down even lower, I would be exiting completely myself. That's just me. Because I don't, there's a lot of bearishness right here. And it might just be short term. We might just drop back off, and then, there's a trend coming. It might just drop off to this trend. It might come down to the 50-day, which would come in about the same spot. It might just roll down here for 2 or 3 weeks and then continue the trend. But in the short term, yeah, this thing's super bearish. It's too extended. It's overextended. We got bearish candles showing up now. I would be cautious. And Apple, I think, is going to be very similar, almost identical. Look at that. Except we got a huge, huge bearish engulfing pattern. Is that? Yeah, look at that. Holy cow. All right. Where's Apple at? I'm not gonna pull the trigger on this right now, but I'm certainly gonna be because yeah, let me go back to I'm gonna get rid of that, but yeah, all-time high on Apple. And is this really justified? Does the larger economy really justify Apple being at an all-time high? Maybe, maybe not. I don't really care about that as far as this goes. There's a spot right there. Interesting. Notice the equidistance between those pretty much. There's 12, 13 points, 12 points, almost the same. This run is pretty overextended. And look at what happened here. These are the bear market rallies we get, right? Boom. Huge rally from 130 to 175. And then the V bottoms and V tops are not common, but in bear markets, they can be. And notice here's another one, right? This huge run in Apple, probably short covering, head and shoulders, drops off, plays out beautifully. That's the beauty of patterns right there. Beautiful head and shoulders. Plays out beautifully, turns and rallies, falls off. Rallies, falls off. Big, steep rallies, and they're followed by big, steep declines. Not always, but actually they kind of are. Here's one here, boom, right? Then it takes. This time it danced around a little bit before it dropped. But this rally is most likely not sustainable. And all-time highs for this thing, It's really hard to justify that in my mind with the economy and the condition that it's in. That's a solid trend. It's been tested numerous times. Nope. She likes to dig on the screen. Come on. Go right there. But yeah, so that bearish engulfing pattern after a doji at an all-time high, huge, especially look at the volume on it. And again, I'll put that vertical line. You can see the volume is like double. What's the line there? The average is at 555 million. That day did 121 million, more than double. That's huge. As of right now, there's this little doji. If on Monday, if it closes like this, I might just watch it. We'll see what it looks like intraday. But if it was to start to sell off, in fact, I'll look at this. I can't say what I'm going to do because it depends on what the market looks like. It might recover and rally for the day. Who knows? Can you guys see that? Look at that cat. That's my water cup. He's drinking out of it. I'm sorry. I don't think I've ever seen her do that. I know she has. Not mine anymore, exactly. I have a little bit of coffee left, so give me in there a little bit. Holy cow, I can't believe her. Wow. I know. That's the first. Anyway, yeah. Anyway, I lost my train of thought. She is thirsty. She's still drinking. So yeah, we'll see what it closes like. I would put because if we close into, right, if you haven't had patterns of flash, if you had patterns of flash, you know what happens. If we cross the halfway point of this candle, yesterday's candle, what pattern do we have? Dark cloud cover, right? So if it comes down here to say 178 or so, 178.50, if it closes in that range, then we have a dark cloud cover after a bearish engulfing pattern and two more bearish candles. You got, this isn't quite a hangman, but it's pretty close. And a shooting star here. So you've got lots of bearish candles all over a week and a half's time that are indicating some serious bearishness. And if we close below the halfway point of yesterday's candle, that's one more bearish signal. Am I going to take a huge position? No. But will I take a small position in hopes that the candle pattern plays out and it drops for 2 or 3 days quickly? Yeah. Now, here's the other thing too. Let's say it closes like it is right now with a little doji. Monday, it gaps down to about here or anywhere down here, really. And then starts to sell off. Then what do we have? Evening star, right? So you got two shooting stars here, a breakout to a new high, followed by a doji, followed by a huge bearish engulfing pattern with massive volume, followed by quasi hangman, another shooting star. The bull's trying to get it up here, but notice the volume yesterday was tiny. So the bears, with the volume and the patterns they're getting here, there's a lot of bearishness in this signal right here. And if it gaps down Monday, if it closes like this, and we get a gap down Monday, we have an evening star with the bears, it would just be huge. So we'll see. We'll see what happens with Apple, but okay, Trip, I got to get there. I just realized we're out of time, but let me get to IBM. Yeah, good point, Jim. Lower high as well, he said. So yeah, I love the looks of Apple right now for a short-term bearish play, depending on what happens today, of course. Or Monday, it could come to that point too. Oh, that's monthly. That's a lot. Well, yeah. Is that an all-time high on IBM? It is. Okay, there's weekly. IBM's kind of all over the place. I'm gonna move that up to there. I mean, I like trading it when there's a nice clean signal on it. I love it because it's really, for being a pretty big stock and pretty volatile and a lot of liquidity, it's their options are not terribly expensive and they move good, right? At least that's what I've experienced with it. So well, it's a weekly chart. You can see the beautiful double bottom it made. right? And the midpoint was right there about 129, 130 basically. So it broke out of that. Got a nice looking little trend. We'll draw this on the weekly stuff and then we'll go to daily and modify it a little bit. Whoops, that's not what I wanted. Yeah, we're right there, aren't we? 135 is very solid, about 135, 136, it looks like 137. That's a pretty solid resistance zone right there. You can see it's hit it here, hit it there. Yeah, she drinks my water and now she wants to play. She's hydrated. She's got energy. I don't know what the deal is. I told you she's like a dog. She literally bringing this toy, drops it on my desk, and I throw it. She'll bring it back. It's kind of funny. Yeah, so there's the double bottom, right? And the midpoint's right here. So that's a break of it. Unless, well, there's kind of there's a double bottom there. And there's a little miniature double bottom here, which I usually don't put a lot. This one has a nice solid midpoint. So this is one that could be a good trade. This is one that I would be like, maybe take a small position on, right? Because especially you come in closer here. I mean, you look at the days, that's a stretch to call this a double bottom. It's a little too tight of a range. This is not bad. You got several days in between the bottoms. You got a nice solid midpoint. And this not so much. But does that mean it won't play out sometimes? And sure enough, I mean, you'll find patterns that I wouldn't necessarily consider patterns, but we're still at a support level. So even if you don't call this a double bottom, it's at a support level and it could take off. And sure enough, it did. Right? It's easy to look back and say, oh, look at what it did. Well, but, and I get this, I was on Benson several months ago and the guy goes, well, why don't you just get in here? Why don't you get in there? And I was like, okay. So I backed up the chart like this. I said, okay, you look at that right there. You tell me on that picture right there that you're going to pull the trigger on some calls. You're looking at this picture right here and you're going to get bullish on that stock. Oh, yeah, that's a good point. Like, yeah, it's easy to see now. It's a whole different ballgame when the bullets are flying, right? Now, this day maybe would have changed your mind, but then it took off really quick. It's like, I wouldn't have caught this because there's no really solid pattern here saying that this is going to happen. It's aggravating, when there's no signal that says this is going to happen and you miss it. But you got to get used to that because in 23 years now, it happens all the time. And I have to remind myself, I have to go back and go, okay, there was no reason to get in here. There was no bullish indication that said it's going to do this is what's going to happen. Just like back here. I mean, well, I guess if you call this a flag, you got a big drop off, right? It turned over big time. If you consider this a flag, then this would be your entry day. This is a good indication, right? You got a hammer pattern right there, basically at a support area. And then a big up day the next day. And then it came down, tested it, popped back up, created a midpoint, comes back down, another kind of a spinning top on here, and then a big follow through here. Yeah, this would have been a good trade, but you only would have caught, your entry point is going to be about 126. You're going to get stopped out probably on this day about 129. So you got a 3-point move. Not huge, but so again, you got to remember that it's easy in hindsight. It's a little more challenging when things are flying. So, but yeah, as far as IBM goes right now, I think that resistance zone, the 135, I would be watching for. And even though this isn't quite a tweezer top, depending on where it closes today. But we have the beginnings of a tweezer top. It's not precisely exact, but close enough. If we get another shooting star like we had yesterday, you got a double shooting star with pretty close to a tweezer top. I would take a little bit of risk on a bearish play on this. Looking for maybe a move back to this level here. So here's the previous resistance. So if it pulls back from here, it'll probably land about 130. It could just crash right through it. So we'll see. We shall see. But yeah, IBM's, makes these big moves like this. And that's one thing you want to look at individual stocks and say, okay, does it do that? And you can see this time here it did. It stalled out just a little bit and then took off. Stall out here, a little flag pattern, a little pennant pattern, boom, takes off. So IBM has a history of doing that. It could just keep running all the way up to this 145. If it ran quickly in the next 1 to 2 weeks up to 145, then I would most likely be super bearish. But you'll notice this time when it did it, look what happened. It took a good 3 or 4 weeks and this thing just dancing around and testing that level before it made a big move to the downside. So after we have a big move like this, even though we have a tweezer top, and well, we'll see how today ends. Again, if we get another shooting star, that would give me maybe a short term, 1 to 3 days, maybe 5 days for a candle trade, something quick, hopefully like this. You would hope this happens. But notice that this happened after a stall out. So this is more common. This is why V bottoms, V tops, you see a lot of bulls coming in here. And, they're deciding get in, get out. The bears finally took control. But there's always kind of a tug of war, or usually, I should say, usually not always, but usually there's a tug of war after something like this, a big move, where they're trying to figure out who's going to win this battle. And clearly the bears won. So the question is, we're at a battle line right now with IBM. Is it going to break out? Are the bulls going to win, or the bears going to win? So usually when you get into a battle zone like this, I wait to see who's got the momentum, who's actually going. Apple's a perfect example, right? Going back to that. This is where the bears and bulls have been battling, and right now the bears have the advantage at this moment in time. Of course, that's, today's candle will kind of determine if the market bounces and rallies and takes off, and this is a big bullish candle, then obviously the bears have the bulls pulled the bears back into the pit. They were almost there. They almost had them right here. And then the bears came back and said, no. We're going to win this thing. And for a couple of days, they had control. The bulls came in yesterday and basically evened it out with a bullish candle, but light volume. So as of yesterday, they were kind of neutral. Today, another spinning top or dark cloud cover, or if things really tanked and this was an engulfing pattern, I'd be all over it from a bear side. It just depends on how far, because then you have to look at risk reward, right? If this thing does a bearish engulfing pattern, how far does it go? And you've got the trend line coming into play as well. So there's lots of little factors you got to figure out and go, okay, what do you do here? And then the ultimate question is risk reward. How much potential do you have and how much risk are you going to take? So, right. Oh, I'll have to look for that, Bonnie. Apparently there's a lot of other cat people in here. I know. Next thing you know, I'm going to have 4 or 5 and be an old cat lady. I just never expected to even have a pet. But when this lady offered the cat, she was super, like, okay. All right, I'll take her. And I'm glad I did. So you got 5. It's been fun watching her and just the craziness that she does. So, well, I just noticed your comment strip. Was that IBM? I gotta shut up. Holy cow, it's 10 after. Sorry, Lee. What's the 216? I'm lost on what you're referring to, Trip. I just noticed your comment. I didn't notice it earlier, so I don't know if I need to go back to it or not. But there's an Apple conference this week. Oh, the all-time high is 216. Oh, okay. Oh, is that split adjusted? I assume too. Yeah, because this had splits and over the years. So why do I have the 22 moving average on the volume? Just to get an idea of what the average volume is on a monthly basis, right? Because there's 21 or 22 trading days in a month. So if you want to see a month's worth of average, so that way it's about relativity, right? Because everything in the market's relative. So you want to keep an idea of, because if we go back here to November when the market was really bearish, moving average was at 95 million. So on a day like this, it was barely above the average. It did a little over 100 million. Well, back then in October, 97, 95, almost 100 million was average, right? So just a little bit above the average. Now our average is only 54. So even though this 100 million, 116, 118 million it did that day is about the same as we did in October, it's double the average now versus back then it was only like a 10% jump. So again, it's important to keep things relative. So it's good to have an average on there so you know what's normal right now in this moment, because it does fluctuate. So some are a little more stable and a little more steady, but you can see, I mean, just in 6 months in Apple, we went from trading 100 million on average per day. Now we're at 54, which is, I'm glad you brought that up actually, because look at this. You see this trend that we're in, right? We get this nice solid trend line, and then I'm going to shut up with this. The volume has literally been cut in half. Even as we have rallied, the volume is still really light. In fact, the moving average line, as it's rallying, you can see right here, especially in April, dropped off. We were up at 60, 70 million before. As the trend started, we were averaging 60 million a day. And as the trend has continued, the volume has gotten lighter. And you'll notice actually on these bearish days where we had this big spike in volume, it's actually making the volume go up. The average volume, that moving average line ticked up a little bit after these big spikes in the bearish days. So if the volume ticks up and the stock turns down, if the moving average ticks up, that means the bearishness has definitely increased. That makes sense? So it's good to be able to see the slope of, speaking of noise, it's a good way to finish. This takes out the noise of the moving average or the volume too, right? So if the slope of the moving average on the volume is going down while the trend is going up, that's a bearish sign as well. So we have a trend that's been in place with lighter and lighter volume. And now we have some significant bearish candles. A break of that trend, especially if it comes down and hits it, we got that convergence point right there. If it breaks there, I'd be bearish right to 166 for sure. So, yep. Let's see. Is there any on that? Okay, this is it. Yeah, not anything soon. Divergence is just, or MACD is, when you say divergence, Tim, it got me thinking of MACD. It's just kind of flatlined. I don't know if that's really going down that much or not. It's just kind of flat. Yeah, a little bit. So MACD is not following along with the trend, which usually says, be careful. But that's the only thing I see that's of significance. So, all right, I got to shut up. We're way late. I started a couple minutes late, but now I'm way over. So anyway, sorry for keeping you late. We'll go clean up this coffee I spilled and dump out the cat's water. All righty. Appreciate y'all coming out, having some fun, hanging out. And we will see you soon, hopefully. All right. Y'all take care. God bless. Bye-bye.